Hello, this is Ashok. So now we will discuss how we can have a financial freedom by having a proper plan and also diversifying our investments. So before we discuss on the investments part, so we will just talk about the basic points. So in our early career, so we need to focus to achieve 10 to 15% increase in our pay. So this is possible only by upskilling and also become expertise in the areas where we work. And next thing is, so we have to save first and then spend. So if we have this concept, so we'll have a good corpus, and we can also think to retire early. So when I say retire early, we are not going to just stop working, so we can pursue our own hobbies. And next thing is, so insurance. So now, so we just have to leave all the traditional LIC policies and think about term insurance and health insurance. So term insurance, we may have to take 20 times of our annual pay, and also health insurance may be more than 25 lakh. And when it's come to again term insurance, so if you take it in your early career, so you may get term insurance like 1 to 2 crore. But as our pay get increased, maybe we have to revise and keep increasing that. And also, so people must have a emergency fund. So this is like, I mean, now most of the advisories tell like at least we must have a 6 years, 6 months of our net income. So, but it is person to person or family to family, it may change. But you can think to have at least some corpus in our bank or in FDs to mitigate these emergencies. Now, when it comes to investments, so there are wide variety of investments. So we must diversify it to handle the risk and also the reward. So here is the top asset classes. So equities, real estate, fixed income, and gold. So here we will discuss more on the equities. So maybe as you see here, so real estate, all of you know, and fixed income. Yeah, there are many fixed, the FDs, fixed term, and PPF, CPFs, RD, and government bonds we have. And gold, we mostly invest in physical. So if you are not interested in physical, we also have a lot of other options like buying ETFs and also sovereign gold. So these are the options we have. So let's dig more on the equity side. Even in the equity side, so we have to diversify for sure to get the good reward. Maybe get, now our target is not just getting the 12% to 15%. If we want 12 to 15% in long term, so even if we invest in index funds like Nifty 50 or mid cap 50, mid cap funds, so we can easily get them. We can right forward go to mutual fund and buy by getting, if you want to get 12 to 15, yeah, we can get that easily. But here, we are thinking about to get around 20 to 30% of year on year returns for a good corpus in 20 years. So for this is the allocation we are thinking about. Maybe in listed stocks 75%. So what is about listed? So whatever you see in our demat account and easily tradable is a listed stock. All these are public companies, so we can directly log into our demat accounts and buy them from NSE or BSE. And next is, so this is an unlisted space. So before it get listed, so some companies trade in a private market. So we can directly purchase from the promoters or any persons who owns those shares, maybe employee quota, something like. So there is a wide opportunity here, and this will definitely give us good return in maybe by investing for 2 to 3 years or even 3 to 5 years. So, but here there is a risk and reward. So we have to take some risk. Some companies may also give some loss, but yeah, we will cautiously take the stop loss and invest on the companies which are fundamentally strong. And in addition to unlisted space, so startups also come as unlisted stocks, but unlisted, so pre-IPOs are matured companies. So like NSE. So NSE is a one company which is not listed. So many companies trade in NSE, but NSE is not listed it in the public market. And another example is Swiggy. Swiggy is not listed it, and they're coming for IPO in a year or so. And there are many fundamentally strong companies in pre-IPO space. So we will invest there to get good returns and diversify it. So here there is a risk, but and also the meantime we get the good reward. And when I say risk, so we will think about everything and invest in good companies. And third is startup. So these are very early stage. So maybe here they go for, I mean, they seek for some angel investors for them to fund, and maybe even here also we have to invest to get good returns in long run. And here the returns will be we can't even imagine. So and even the risk is also more. That's the reason maybe we'll just invest like 1 to 5% of our investments. And when it comes to next part, so IPO, so now you are keep hearing, right? So buyers finance IPO or some other. So they are, and listing day. So we are seeing some companies are even giving more than 100% returns. So that's like a 1 to 2 days. We are giving, I mean, we are getting 100% 100% rise. So here we don't lose anything. So it's just like, I mean, using the surplus which we have in our bank account. So we will just bid them using the different accounts based on the surplus we have. So we will allot, I mean, we'll raise a bid in retail category or maybe HNI or NNI. So there are many categories. So if we get the bid and if we get the allotment, that's fine. So we'll get to 50% to 100% listing gains in a day or two. If we don't get, that's okay. So we don't lose anything. It's just a matter of 2 to 3 days. Our amount, our investment will get just blocked, and that will be released if the allotment is not happened. So there is a, I mean, so these are the main four asset classes which we are focusing. So the main area is listed. So here the risk is very limited. So we will pick all the fundamentally strong stocks, and we keep tracking them. And as I said, so this is for long term. So we will look for 10 to 20 years of long term horizon. So we have to give time for them to grow. So then only we can see the good corpus. And see, so this is, I mean, this page says us our how, I mean, how our goal should be and also what we can expect. So the planning is main thing. So as I said, so just back, so the diversification, we must have a diversification and also have a plan to achieve the good corpus in long run. And yeah, so discipline and patience is the main thing. So we should not see 1 2 years return and just lose the patience, and maybe yeah, this doesn't shoot for me, let's leave it, something like that. So we should not see. So this is for long run, right? At least you should start maybe with some small amounts and see how it is. Then you keep increasing. But we should have a discipline, constant, I mean, consistent investments we should do, maybe like systematic investment plans, or maybe some surplus if you have to keep when there is a downturn. So due to some news, so market may go down for some reason. So that time we should invest and have a patience to grow. So yeah, definitely, as I keep saying, so compounding will really work. And maybe in next few slides I will show how it works. But we must give time to grow. So anyhow, we'll pick the stocks that are very good, but we have to give time to grow. So that is the main part. So we can invest, as I said, so invest lump sum or SIP. That's even we can start with a basic amount of 5,000. That is also possible. So that is okay. And as we talked, so the markets are just volatile in short time. Maybe today it may go down, and tomorrow it will rise, and day after tomorrow it just stabilizes there. It's like I meant sideways. So few days, few months, maybe 1 2 years, market is volatile. But if we see in longer horizon, like 10 years, 5 years, 15 years, 20 years, so the market is keep going. So you can even check any of the charts, so the market will keep rise. That's it for if you choose 10 years or 15 years or 20 years horizon. Now we are targeting around 20 to 30% of returns on yearly average. So as I said, so 15%, 12% is bare minimum, so that we can get easily by investing in index funds. But yeah, here as we are diversifying and also taking some risk, so we are expecting good returns here. But that is up to the person. So how much risk they want to say take. If they don't want to take any risk, yeah, that's fine. So we can just think about the minimum returns, and we can plan accordingly. And this is, just a picture how it is for systematic investment. I have taken an example of a monthly investment of 1 lakh, but you can take, if you are, if you want to just test it out even with 5,000 or 10,000 or 20,000, or whatever the amount it is, feasible for you. That's okay. You can just divide it by the amount which you want to invest and see, maybe calculate. There are many calculators are available, SIP calculators are available online, right? You can do with simple, the basic returns 15% by investing in some index funds. So if we continue to invest 1 lakh for 20 years, we get 15 crore. Likewise, if we if we beat that index returns and generate some alpha like 20% returns, our corpus will be 31 crores in 20 years. And if we, diversify in some risky classes and generate 25%, so our corpus will be for next 20 years is 68 crores. And yeah, so if we reach our 30%, then the corpus will be 153 crores. But yeah, so the 15% to 30% is varies, but we are targeting anywhere between 20 to 30. And here is the slide for lump sum investment. So if we have some lump sum amount, so now I took an example for 1 crore, but this is again the person to person vary. So if we have 5 lakhs, you can just divide it by 1 crore, 1 crore divided by 20. If we have 10 lakhs, just do a math, divide it by 10 and see the corpus. If we have 1 crore and invest for 20 years with an return of 15%, so we will get 16 crore. Like that, if we beat 15% and try for 20%, this will be 38 crore. And likewise 25% if we get returns, so 86 crores. And 30% if we can generate by diversifying and also taking some risk, so we'll be getting 190 crore. So this is a, overall idea. So if you have any questions, so we will discuss, and also we will prepare a plan for to achieve the good returns. Maybe we are as said, so we are targeting for the 20 to 30%, right? So we have a plan. Let's discuss. So if you have any questions, so please reach out to me. I will also, get a feedback, and also if you have any investment ideas, we can discuss together and grow together. Thank you. Thank you for sparing time. This is Ashok and signing off. Bye.